Welcome to another episode of the Pacific Growth Strategies Chalk Talk. In today's episode, we take a look at the acid test, which we use to measure our ability to cover our short-term obligations. As you'll soon see, this is a more conservative liquidity test than the current ratio. Now let's take a look on the whiteboard. So let's take a look at the acid test on the whiteboard. We'll start with the formula, which will take our cash plus our short-term marketable securities, more on that in a minute, plus our accounts receivable. So we'll take our cash plus short-term marketable securities plus our accounts receivable, and we'll divide that by our current liabilities. Again, our cash plus short-term marketable securities plus accounts receivable divided by current liabilities gives us our acid test ratio. Our period range in this case will be December 31st, and our cash on hand on December 31st balance sheet is $50,000. Now, some organizations may choose to hold short-term marketable securities such as stocks, bonds, and treasury bills as a cash alternative. In our case, we don't, so we'll place 0. Next, we'll take our accounts receivable, which we'll find on the December 31st balance sheet of $150,000. And finally, our current liabilities, again on our December 31st balance sheet, gives us $175,000. So we have our formula and our components. Now let's take a look at the calculation. We'll start off by adding our cash, $50,000, plus our short-term marketable securities, which are 0, and our accounts receivable of $150,000. We'll divide by our current liabilities of $175,000. Continuing with the calculation, we'll have $50,000 plus 0 plus $150,000 gives us $200,000 divided by $175,000 current liabilities gives us an acid test ratio of 1.14. Okay, so as we found out on our whiteboard, the acid test for this case was 1.14. Is that good? Well, it depends on the industry and the business itself. But what does the acid test tell us? As you probably noticed, the acid test removes assets such as inventory that are more difficult to convert to cash quickly from the liquidity calculation. With an acid test ratio greater than 1, as we have in this case, we are likely to be able to cover our current obligations. If our acid test ratio was 1.0 exactly, it means we'd be able to cover our current obligations dollar for dollar. If it was less than 1, say 0.75, we may be at risk of a cash shortage without change. For more information on how the acid test can help your business and cash flow, visit pacificgrowthstrategies.com and book a free discovery call. Thank you for tuning in, and as always, we wish you continued success.